The big news over the weekend was that the US carried out a major military operation in Venezuela and captured the Venezuelan president Maduro. Now, the political fallout is still unfolding, but here's what it means for markets. So Venezuela matters for markets because it sits on huge oil reserves. Venezuela has one of the largest proven crude oil reserves, roughly 17% of the total global oil reserves. But despite the many headlines, the near-term market reaction has actually been more muted than I think a lot of people would have expected. Now, in terms of the impact on the oil price, which would be the most obvious place to see the impact, in the first trading session after the raid, Brent crude settled a little above $61 a barrel, so up about 1% on the day, meaning definitely not a panic spike. But then in the next couple of days, President Trump said Venezuela would transfer 30 to 50 million barrels of oil to the US to be sold. Now, more supply is obviously bad for prices, so oil prices did fall, and Brent is now trading at around $60 per barrel. The biggest impact so far as markets go, has been on US oil companies. So their shares rose because investors started to price in the possibility that US firms could play a role in restarting Venezuelan oil production. Chevron, for example, they were up about 6% on Monday, although much of that move has now actually reversed. Where we've seen a more sustained impact is actually on the gold price. So gold is often used as a barometer for how worried markets are because it's thought to act as a safe haven asset, so tends to rise when investors feel worried or nervous. And after the events of the weekend, gold is up around 2 to 3%, and it's now back to over $4,400 an ounce. As for stocks though, the S&P finished up about 0.5% on Monday, and then it rose another 0.5% on Tuesday, which shows that the market doesn't really believe that this is going to lead to World War III or have major stock market ramifications. The main takeaway for investors then is that oil is reacted to expected increases in supply, while gold is reacting to the slightly higher levels of market uncertainty. For long-term investors though, the message is still to avoid knee-jerk portfolio changes, stay diversified, stick to your plan, and just remember that just because it's in the news doesn't mean that it's relevant for your portfolio.